Welcome back to the deliberations of the Citizens Monetary Policy Committee of CNBC-TV18. I've been speaking with Chairman Pronab Sen and members Samiran Chakraborty, Soumya Kanti Ghosh, Sajjid Chinoy and Sonal Varma. Gentlemen and Sonal, thank you very much for waiting on. Well, the sense I'm getting is that inflation is, according to our committee members, not coming down anytime soon. So, Sajjid, first to you, if the sense is that inflation is not coming down and the MPC actually hikes, should they keep the option open? Should the stance indicate that it will continue to remain removal of accommodation?
Lata, just to be clear, inflation is going to come down in the coming months. We expect March to be below 6%, closer to 5.5%. That will be helped a lot by base effects. So the first 6 months of the next fiscal year get huge favorable base effects. And then in the second half of the year, things pick up. So there will be some headline relief. The worry is about, A, core inflation being sticky, and B, whether the food and weather shocks that others have spoken about will create upside surprises. Now, I think the balancing act for the RBI is, the fact is, we have done more than 300 basis points of hikes. Monetary policy does work with long and variable lags. And so at some point, the RBI is going to have to stop and wait for the previous hikes to filter through, right? And they'll have to be cognizant of that. The problem is that we've already seen that bond yields in India, risk-free rates, have come off because of what's happening globally. And so if one were to hike rates, but either change the stance to neutral or definitively suggest that the rate hiking cycle is down, then the central bank will be trampling on its own monetary transmission, because then you will not get the transmission in markets that you want to get from the rate hike. So I think this will have to be a delicate balancing act where there is some cognizance taken that a lot of hiking has been done, and the central bank is aware of that and will become data dependent going forward. But at the same time, I think still retaining its current stance. So I would expect the existing stance with a caveat. I think a switch to neutral would in a way offset the rate hike itself in terms of the impact it has on bond yields, and on monetary transmission more generally. So I think the stance will be closely watched and will have to be a balancing act if the RBI does decide to hike rates.
Okay. Well, Samiran, if it is 675, then if their 1 year forward inflation is 5.3, there is a fairly high real rate of almost 150 basis points. As of today's inflation also, there is a reasonable amount of, real rate. So do you think they will have to sound even more hawkish in the stance?
So, Lata, our sense is that whatever accommodation RBI provided during the pandemic, that entire accommodation, whether it is on the rates front or whether it is on the liquidity front, that has now been withdrawn. If you look at durable liquidity is already down to pre-COVID level. In fact, over the next month or so, it will fall even further. And if you look at rates are also back to pre-COVID. In fact, if you look at real rates have also moved above pre-COVID real policy rates. So I think it will be difficult for them to keep the withdrawal of accommodation phrase. Now, whether they move all the way to neutral or design a new phrase, that's tough to say. But we think neutral is a possibility because neutral gives you flexibility. It does not mean that you cannot hike from neutral. So if the requirement is there for a hike, they can do it. And what it does also is that in April, May, when the fresh supply of government bonds hits the market, if for some reason there is not enough demand for it and yields start spiking up, so to avoid any contagion effect of that, they can start doing some liquidity infusion operations through OMO, etc. Also, if their stance is neutral. From a withdrawal of accommodation stance, that will be very difficult to do.
That's a fair point. I heard the RBI top guns saying almost no for an OMO, but I guess all central bankers never say never.
And also, we have to understand that the operating procedure of monetary policy, where weighted average call rate should be equal to the repo rate, that condition is also now being met. So we are back to that normalized operating procedure.
So accommodation has been withdrawn by that standard. But Soumya, as the representative of the biggest bank, you would have a better idea of growth. So what if the message goes that we have finished hiking and, Sajid's fear that will undo the good work of hikes. Maybe growth needs a crutch, you think?
So I think, Lata, growth actually has been slowing down. If you look into some of the affordable housing segment, there's a distinct slowdown now, and the housing loan market is now looking more of an asymmetric. You have two segments. One segment which has its own funds and can finance. The other segment is who needs support from the banks, and that has been shown a distinct slowdown in the last 6 to 7 months. And there is also evidence of the other books of the banks slowing down. For example, the SME sector. So I think at some point of time, we need to understand, take a pause and understand how the effects of the past monetary actions have been playing out. Yes, inflation is still a problem, and to Sajid's specific point on the yields coming down, I can cite that the TREPS rate actually has moved to 670, 675, indicating that an additional 25 basis points rate hike has already been possibly in terms of the liquidity has happened in the market. So my sense is that given the final point regarding Samiran's point, you can't have a change in stance and a hike in the same policy, because that will give two signals to the market. You can, of course, change the stance or change the wording, but doing that will mean that you are actually making the phrase from higher for longer to lower for longer. You are keeping the rates high so that you can cut the rates in future, and that should never be the message to the markets under any circumstances.
Well, we'll have to see how they justify if they hike and, go to neutral. Sonal, of all the people, the GDP forecasts of Nomura are the lowest. You think that the Reserve Bank not only needs to give the message of neutral, but there can be cuts in 23?
Lata, I think, as Shama was saying, I think growth, there are clear indications that the cycle has turned. It started out with the export numbers, and more recently it's been the consumer discretionary demand. So affordable housing is one, but paints has been slowing for some time. Retail side is softer. Even on cars, which were holding up, the feedback from dealers for March is that demand is slowing down. And I think within a month or two, we will see that reflect in the numbers. So I think incrementally these spillovers from the global side, but also the impact of domestic tightening do mean we are underestimating growth. So our projection at 5.3 is below the RBI's forecast of 6.4. On inflation, Lata, I would also sort of differ from the current expectations. I think clearly the Jan-March inflation surprise on the upside. A good chunk of that was actually because of cereals, which is more technical. It does not in any way actually change the FY24 trajectory for inflation, which is, in the worst case scenario, 5.3, but more likely in our view is going to end up being below 5% for FY24. I think the forward-looking inflation trajectory is also looking softer. Commodity prices are down. Global growth outlook is looking weaker. Domestic lead indicators are pointing to a slowdown in demand. We know monetary policy works with lag. So the decision today cannot be based on yesterday's data. It's high time policy becomes forward-looking.
Fair enough. Dr. Sen, finally to you, sir. Your team seems divided, but what do you think the Reserve Bank should indicate in terms of guidance?
No, I think the Reserve Bank is in a position where they will have a lot to say. I mean, I think a lot of their discussion will have to center around what's happening to the global economy and what it means for India. I think that's going to take up a large chunk. In terms of what they say about the conditions in India and the sort of the probabilities of growth going up, I think they would be a little cautious.
Oh.
The real question is what are they going to say about inflation? Now, the fact of the matter is, yes, we do know monetary policy works with long and unpredictable lags, but the fact of the matter is that inflation simply has not reacted to the monetary policy that has been carried out for the last 2 years. Now, can the RBI take the position that we are looking forward, and hopefully the cumulative effects are going to show up this year? I doubt whether they will do that, which doesn't, of course, mean that it changes what I think. because in my personal opinion, the repo is already too high, and the inflation management should look at other instruments. But I don't think the RBI will look at it that way. What they will be doing is we are in a situation where the global banking crisis is going to roil up the financial markets, and we could be looking at a possibility of there being a flight of capital. So that kind of discussion is going to be out there, and I think they will react.
Okay. Okay, now that's another item I didn't introduce simply because I thought the current account deficit also was last year's problem. But we don't have time for that. We have only time for vote. So please get ready to tell us what you expect the MPC to do on the repo rate. Samiran Chakraborty, you go first.
We think it's a 25 basis point hike in repo.
Okay.
Soumya? We think it's a pause, but the RBI may do a balancing act.
Okay, pause. We have to go only with that.
Yes.
Sajjid?
We think a 25 basis point hike.
Okay. And Sonal?
Pause.
Okay. Dr. Sen, the team is equally divided. Yours is the casting vote, sir.
Well, if I were voting myself, I would say pause. If I'm predicting what MPC is going to do, I'll say 25 basis points.
Okay, so it's a 25 basis hike. The hikes win. Let's look at the stance. Samiran?
We think a change of stance, probably to neutral.
Neutral.
No
Soumya?
change in stance.
Change to neutral.
No change in stance.
No change in stance. Okay. No change in stance from Soumya's. Sajjid?
Something intermediate between what their current stance is and neutral.
Okay, but you're not voting neutral.
No.
Okay, not neutral. So I would say retain with tweaks. Sonal?
Retain stance.
Dr. Sen?
For precisely the same reasons Sonal mentioned, I would say neutral, because I think they have to be a little less decisive than retaining stance would imply.
Okay. All right. So even this is actually quite narrowly divided. The chairman is on the side of neutral, but not all members believe that the word neutral will be announced. It clearly looks like it's going to be a contentious MPC. And who knows, maybe the governor will have to use his casting vote this time. Wrap up on this special edition of the MPC.